I do think, if you're relying on wage growth, you're going to be at the bottom of the K because there's just no way that's going to keep up with asset inflation. And people wonder why the economy isn't crashing, right? But the people at the top are still spending, which is keeping the job market afloat at this point. So they're spending on services, they're spending on products, they're spending on vacations, they're spending. So that's kind of trickling down to keep, the jobs afloat. But the people that are at the bottom of the K, they are struggling because they are, living paycheck to paycheck and they don't have these assets that are moving with inflation. So they're just relying on their wages. And we can look at wages, as Ken was saying with AI, wages, aren't probably going to do that great over the next, decade, right? Because you're going to have more and more jobs replaced. And what creates higher wages is competition in the job market, right? Because why would an employer pay more than they have to, right? If they have a bunch of people applying. So I do think, if you're relying on wage growth, you're going to be at the bottom of the K because there's just no way that's going to keep up with asset inflation.